The Commercial Real Estate Show is brought to you by CohnReznick, forward-thinking advice to navigate business and financial issues. Visit CohnReznick.com. By BB&T, banking, business, and commercial real estate loans. Visit BB&T.com. And Bull Realty, when your business requires proven performance, visit BullRealty.com. And by France Media, providing exposure to the world of commercial real estate. Visit FranceMediaInc.com. Welcome to the Commercial Real Estate Show, where we are always ready, right? Thanks for joining us to lead, learn, and laugh. Learn market knowledge and best practices to lead your company's success. And that's whatever type of company you work with. And we have to have some fun along the way, I think, as well. I'm Michael Bull, your host to the world of commercial real estate. Well, today we're going to explore land and development in 2013. We'll find out about the latest on commercial development from a leading commercial general contractor who has been quite busy in this cycle, and a super lawyer who specializes in zoning and entitlement. First, let's get a look at residential lots and the housing market. In past recessions, new housing construction has been a catalyst to lead us on job growth, consumer spending, and an improved economy. So let's see what we should expect for land sales, housing, and construction in 2013. Please welcome Brad Hunter, Chief Economist and National Director of Consulting with Metro Study, the country's leading provider of primary and secondary market information to the housing and related industries. When it comes to making decisions about anything related to housing or development in the U.S., you want to talk to Metro Study. Brad Hunter, thanks for joining us today.
Michael, good morning.
Well, thank you. And Brad, many of our listeners are investors, lenders, developers, and builders dealing with subdivisions and lots. At one point in the recession, I heard we had years and years of supply of developed lots. How much has that improved?
Well, it's improved tremendously. We've gone from well over 100 months of supply in markets like Phoenix and Atlanta to a much lower level. And it's interesting, when you dig deeper into the information on lot supplies, you actually find that we have lot shortages in a lot of the hot submarkets around the country. Nationwide, if you looked at our count, you'd see there's a 55-month supply of vacant developed lots, but there's only about a 15 to 18-month supply in areas like Gilbert and Chandler within the Phoenix market, the Forsyth County submarket in Atlanta, Boynton, Delray, Boca Raton in South Florida. Very tight supplies of lots, and lot prices are going up very sharply as a result.
Yeah, I think that's a very good point. You guys do great research on your markets and your submarkets, and yeah, it's interesting. If you talk about the housing market doing well or doing poorly, you can't do that. It's not a general statement. You got to look at the individual submarkets within these markets. And what about the supply of available new and resale homes right now? What do you see there, Brad?
Well, things are very tight there as well. When you look at the resale markets, you see 4 months worth of supply of resales on the MLS in a lot of the hot markets. One of the numbers that we count ourselves is what we call finished vacant supply. That's the number of homes that were built by the builders that are just sitting there still vacant. That used to be an extremely high number back in 2007, 2008. It started to come down quite a bit. It's down by two-thirds from the peak. And so actually conditions are very tight. So now when a builder sells a house, they have to start construction on another house just to be able to keep up with demand, whereas 3 years ago they could just sell a house that was already built and already sitting there in their inventory.
Right. And housing starts has been a catalyst for our economy for many years. Are new home construction numbers picking up steam, Brad?
Oh, yeah. We're up about 30% in some markets like South Florida, up by 60% over the last year in markets like Las Vegas and Phoenix. And these are markets that were so badly beaten. Everyone sort of said, Phoenix, that's a basket case. Mm-hmm. And now it's just, like the old adage about the phoenix rising from its ashes. It's really leading the way. And so these markets that were beat up the worst are the ones that are coming back the fastest. Overall, nationwide, we're looking for about a 20% increase in housing starts activity in 2013.
That's interesting. That'd be great for jobs. And, in commercial real estate, you always hear that retail follows roofs, and then the jobs follow the construction industry as well. I remember I used to get gas at this gas station in my boat, and the guy pumping the gas would say, "Michael, are you filling up?" And I'd say, "Yeah, of course I am. Why wouldn't I fill up?" He said, "Well, when you fill up, it makes me feel good that the real estate is doing well." He said, "When you come in here and get $5 worth, I'm selling everything."
Well, you have to look for those leading indicators. Yeah, I heard people using the Starbucks index. Well, if Starbucks business is up, then people must be feeling good because they're paying $6 for a cup of coffee.
That's right. And these homes selling help consumer spending as well, and get some more money rolling in the economy. Are these homes selling? What is the velocity of closed sales? Has that improved dramatically?
Yeah, velocity has improved dramatically, especially in what we call the A locations. Those are the ones that are close to jobs, close to where people want to live, close to the good shopping, close to the, in the good school districts. Builders are selling at an extremely fast rate on a per project basis in those kinds of areas. Even the B areas are pretty strong right now. And not only is the velocity strong, but the builders are raising prices now. And, that's something that's only been happening for just over a year now, I would say, in large numbers. So we're watching this happen. It's sticking. Builders are getting those prices passed through to consumers. Consumers are ponying up and saying, yes, I will pay that price. Why are consumers willing to pay the higher price as well? They're glad to see that we passed the bottom and that prices are moving up. They like that trend. They would much rather buy into a rising market that's just past the bottom rather than buying into a market that's still going down. They didn't want to catch a falling knife, so nobody wanted to buy back in 2010 except for the tax credits that were in effect then. Boosted things up, but now people are buying like crazy in the solid neighborhoods. As you go to the C and D neighborhoods, it's still pretty slow.
Right. That catching a falling knife, I shook when you said that because I heard that so much from investors in commercial real estate back in the latter parts of 2008 and 2009. And it's glad, I think, in commercial real estate, people are a lot more excited as well. What about residential home buyer sentiment? Are buyers more optimistic now?
Yeah, I think they are. They're optimistic about their job situation, about their incomes relative to a couple of years ago. I mean, it's all showing up in the aggregate numbers. We're not creating a whole lot of jobs, but we're a whole lot better off than we were when we were losing jobs. And so we've turned the corner in that way. Sentiment also is driven by the direction of prices. So as builders start to raise prices instead of lowering them, it starts to create this urgency that didn't exist before. People are saying, I better buy now before I miss my chance to get in near the bottom, just past the bottom when prices are just starting to go up. They're still well below peak levels, and not that anybody's counting on getting back to peak levels per se, but they like the direction. Buy into a market that's just started to recover, and we're starting to see home prices go up. We're actually starting to see some people, speculate on new homes in some cases, but that's still a minor part of the market. So it is still heavily driven by end user demand, real home buyers buying a house for, who'd have thought, shelter, and, lifestyle, and the things that really matter to them, instead of buying it as a 401k, as an investment, as a speculative investment.
What about household formation? What do you see there?
That's turned around quite a bit as well. You had a lot of pent-up demand over the last few years, people waiting, doubling up, having a roommate, moving in with mom and dad. The statistics bear that out. And now we're starting to see that turn around. People are starting to say, okay, now I've got a job now. I was having trouble getting a job before. I feel more secure. I've saved up some money, and now I can go and get my own place. Now, a lot of times that's a rental apartment or it's a rental house, but some people are saying, I want to get out and go buy something. Or they go and rent something, and then the person that was renting says, I've finally gotten to the point where I can buy something, and this is a great time to buy because the rates are low and the prices are low, and I'm just going to jump in now and, hopefully ride a wave back up and, get into something while I can still afford it.
Yeah, that's a good point. Well, Brad, what's your one-sentence forecast for 2013?
I think there's going to be increased home construction, increased home sales in tandem, increased prices of homes throughout 2013.
And the crowd is clapping. Brad, thanks for joining us today.
My pleasure, Mike.
If you'd like more information for Brad or Metro Study, visit metrostudy.com. Well, stay with us. We'll next look at commercial development in 2013 and see what to expect there, provide some tips and strategies for buying land and developing commercial real estate. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is made available by professionals at Cone Resnick, BB&T, France Media, and Bull Realty. For more information about these companies or to access additional show podcasts or videos, visit commercialrealestateshow.com.